Alrighty guys, so we have to break down some stocks in this video like we always do on this channel, hence why it's called Stas Talk Stocks. So we're going to break down charts, we're going to go over key levels that I'm looking at in these stocks, and we'll break down some earnings. So if you find value, smash that like button, and feel free to subscribe if you want to see more content like this. And if you want some free money, don't forget to get up to 15 stocks for Moomoo. It is linked down below, or you guys can go to stassurfest.com/Moomoo. Once you open up an account, you get one free share of stock right off the bat. And listen to this, guys, once you deposit at least $100, you get 4 more stocks, totaling 5 stocks. And once you fund your account with at least $1,000, you get 10 more stocks, totaling 15 free stocks. So if you guys want some free money and you want to help out the channel, use that Moomoo link down below. And now, cheers, let's dive into it. So the markets in general today, guys, did not do so well. Well, I guess the NASDAQ did do well. It went up 0.3%, but other than that, we had the Russell down 0.8%, the S&P went down 0.1%, and we had the Dow Jones down 0.6%. And funny enough, guys, the VIX pretty much broke even as the metals. Let me see here. The metals, gold broke even as well, and we had silver down 0.4%. So everything was all over the place today. Let me actually pull up oil and see what crude oil ended up doing. Let me see this. Oil is at about 71 a barrel right now. It looks like it went up around 50 cents on the day, up 0.7%, and it looks like it's trading more towards the bottom of this channel that it's been trading in for, at this point, months, right? Ever since November of 2022. So we're talking half a year at this point. Oil's been trading between 70 to about 80, 83 a barrel. And honestly, guys, it doesn't look like it's going to change anytime soon. We'll see how oil does end up playing out. But overall, guys, today again was all over the place. It was that kind of a day. Everything was, again, all over the place. So the first stock I want to break down is probably my favorite donut spot. Yeah, I mean, I'm going to say it. It is my favorite donut spot. It is good old Krispy Kreme, guys. Ticker symbol DNUT. Let's pull it up and break down what's going on here. And right off the bat, we have an ascending triangle on Krispy Kreme that did not play out today, even though they reported earnings. We'll talk about the earnings here in a second. The stock went up 1%. And you guys can see earlier in the day, let me pull up the intraday chart. Mind you, this stock closed at 15 bucks. Earlier in the day, it was at 15.65 and went all the way down to 14.20, so it dropped around 8-9% after the earnings came out, and it ended up recovering that entire loss, and we actually went up 1% on the day. So at this point, we're at a major resistance on Krispy Kreme, right at around $15, $15.50, $16. This has been resistance for quite some time, for a couple of months now on this stock. And let's see what they ended up reporting. I forget exactly what they did. They did adjusted EPS of 9 cents, which beat the 7 cents expected, and sales also beat $419 million versus the $401 million expected. And you guys can thank me for that. Thank me for that, for the revenue beat, for all the donuts that I've been buying from Krispy Kreme, guys. So let's see. They reaffirmed their full year 23 revenue guidance of $1.65 to $1.68 billion versus the $1.68 billion expected, and they reaffirmed their full year 23 adjusted EPS outlook of 31 cents to 34 cents versus the 33-cent expected. So pretty good guidance there. They beat EPS revenue on the last quarter. Can't complain on that, about that. So I'm going to set my alert at 16 bucks. Let's see if we could break out of that point. And if we do, guys, let me see what the high is on this stock. If you guys don't, if you didn't know, this company used to be a publicly traded company years ago. They actually they went private. Then they ended up going public again, I believe 2 years ago, if I remember correctly. Let me pull the max chart up. When the heck was that? Yeah, about 2 years ago, they ended up going public again. So at this point, we have to wait and see if $16 breaks. If so, we're going to get a massive move, in my opinion, here on Krispy Kreme. The next one I want to break down, guys, which also reported earnings today, is Fiverr. This stock went down 2% on the day, and quite frankly, it has been going down over the past couple of months. It's been a disaster. This stock was at 50 bucks back in February. Then it just hit literally a couple days ago 25 bucks. So we're talking a drop of around 45%. And this stock was doing very well during the pandemic when everybody was working from home. A lot of people still are working from home, but a lot of people were using Fiverr, you know, the freelance services. What was the other one called? Upwork, right? Oh my God, I forgot about Upwork. How has that stock been doing lately? It's at $7. Yeah, look at this, guys. Oh my God. So Upwork was at 65 bucks. Now it's at $7. Talk about a bubble freaking pop in there. This thing's down 90%, and Fiverr's down probably not as much, but still still, I mean, actually, no, I'm wrong. Probably down just as much. Yeah, this is down 91%. Oh, my goodness. So Fiverr ended up reporting this morning. They did 36 cents EPS versus the 24-cent expected, and they did sales of 87.96 million versus 87.66 million estimated. So they beat EPS, beat on revenue. They expect Q2 revenue of 88 to 90 million versus 88.5 million expected, and they boosted their full year 23 guidance to 355 to 365 million, up from the prior 350 to 365 million. So that's pretty decent there, pretty good guidance. Again, they beat EPS and on revenue, but the stock, guys, is not looking so pretty. It went down 2% on the day, and it's been getting destroyed over the past couple of months, like I said. So for me to even consider trading this, guys, we have to get a reversal out of at least the mid-30s, 35 bucks, and at that point, maybe I'd consider it, but we're a long ways away from that, at least as of now. So let me set my alert. Oops, I put it at 350 instead. Let me put it at $35, guys. I doubt it ever gets back towards 300. Maybe it will. I don't know. But right now, I'm going to put my alert at 35 bucks, and we'll see if it could break out of that 180 moving average here on the 4-hour chart. So we also had JD.com report earnings today. That was this morning. Let me pull it up and see what they did. I believe I covered them in one of my previous videos today. Looks like JD did EPS of 69 cents, which beat the 50-cent expected, so that's good. And they beat on sales 35.38 billion versus, what was that, 34.64 billion. So they beat EPS, beat on revenue, and it looks like here service revenue accounted for 20% of Q1 total revenue. That's pretty impressive there. Net product revenue fell 4.3%. Net service revenue rose 34%. Look at that, guys. And overall, the Chinese stocks did pretty well today. JD up 7%, Alibaba up 6%. I believe Alibaba is reporting next week. Let me double check that. I believe next Thursday Alibaba is reporting. So they're starting to get hot again, these Chinese stocks, at least in the very short term. Now, their trends are not reversing yet, but they did very well today. And we'll see if JD could break out of the 180 SMA here on the 4-hour chart, which you guys can clearly see. That's been resistance for quite some time. Maybe we do break out of it and start to make a run from there. If we do break out of there, guys, we could be going to $45, maybe even higher, 45 bucks being the high from, when was this? Back in the end of March, early April. Yeah, that's where we could be going, guys. There could be another 10 bucks upside here, maybe even more. You guys have seen JD get hot in the past. Same with the other Chinese stocks like Tencent. TCEHY is the ticker on that. Alibaba, of course, you guys know, gets hot out of nowhere a lot of the time, or sometimes, right? So those are three companies that reported earnings today. Again, Krispy Kreme, Fiverr, and JD.com. Now, to break down some other movers here, let's take a look at Tesla first. Tesla ended up going up 2% today, and you guys can see we're now testing the top of this channel. Let me actually clear the drawing set. Let me get the good old channel tool out and draw it out for you guys. Look at that. We have a clear downwards channel, which we've been in pretty much the entire year since the beginning of February. Now we're starting to move towards the top of that channel. You guys see my alerts are set at 180 and 185. If we do break out of that 180 SMA, we start taking out the top of the channel. You guessed it, guys. Tesla could be off to the races from that point. Some levels that I'm looking at here in the short term are 188 to 190 roughly. If we break out of there, we could be going to 200, maybe even higher than that. So Tesla's looking interesting. Pretty good day today, but don't get too excited because it is still trading in this downwards channel and we're not really breaking out quite yet. And by the way, guys, speaking of Tesla, Elon Musk officially has stepped down as CEO. I believe he's now the CTO. He didn't step down as CEO of Tesla. I meant to say he stepped down as CEO of Twitter, and now I believe he's the CTO of Twitter. So that's probably a big reason why. I mean, it is a big reason why the stock is moving. It popped heading into close. Now it's up even more after the bell. So maybe this sparks a rally in Tesla stock. You guys have to consider that and keep that in mind. We have to see if we do end up breaking out of this moving average tomorrow or maybe at some point next week. So that is Tesla, guys. Looks like FCNCA continues to just rip. This is First Citizens Bank shares. This stock has done so well over the past couple of weeks. It's insane. It was at 500 bucks. Now it's at 12.30. Today it went up over or right around 5%. And it looks like they reported earnings today as well. I forgot about that. Let me see what they did, or maybe that was yesterday. Either way, they did adjusted EPS of 20.09, so $20 versus the $20.17 estimate. So they actually missed on adjusted EPS. What was their revenue? It looks like here, I'm not seeing their revenue actually. Where the heck is it here? Actually, 9.52 billion. Yeah, it looks like they did 9.52 billion dollars of revenue. And it looks like here SVB's collapse. This is a Barron's article. It says SVB's collapse made a $10 billion profit for this winning bank stock, which I'm assuming is First Citizens Bank shares. So at this point, guys, I don't know. I'm not personally going to chase it, but if it does open up an opportunity in terms of a pullback, hey, maybe I'd consider FCMCA. But at this point, I'm looking for a pullback. I'm being patient on it, and we'll see where it goes from there. Let me pull up Roblox. Roblox seems like it did well today. RBLX is the ticker. It looks like it's right at a big resistance. Guys, right by the 180 SMA here, right at about 40, 41 bucks. If that breaks, we might be taken out, and if we take the highs out from the end of April being about 41, 42, this could start to make a move. And you guys probably remember this stock dropped a couple of weeks ago, I think about a month ago, back in the middle of April. I forgot why it dropped though, but we got some bad news, and the earnings came out a couple of days ago, and since that point, it's been doing pretty well, recovering. It recovered a lot of that loss from the end of April heading into the early days of May. So let's see if we can take out 42 bucks on Roblox, RBLX, and we'll see where it goes from there. I'll put my alert there now. Mark is at or above 42 bucks. And guys, if you haven't gone up to 15 stocks yet for Moomoo, what are you waiting for? Use that link down below or go to StasSurfS.com/Moomoo. Once you open up an account, you get one free share of stock right off the bat. And once you fund your account with at least $100, you get 4 more stocks, totaling 5 stocks. It's free money, guys. And listen to this, it gets even better. Once you fund your account with at least $1,000, you get 10 more stocks, totaling 15 free stocks. So if you guys want some free money and you want to help out the channel, it's a win-win here, guys. Use that link down below, or again, go to StasSurfS.com/Moomoo. You get your free stocks. Again, it helps out the channel. Let me know what stocks you get in the comments. And with that being said, let me see what other stocks ended up moving today. I think we had Beyond Meat report. Oh my gosh, yeah, they ended up going down 18% at a fresh low. They just hit a fresh low of $10 on the 4-hour chart. My goodness, I'm not gonna lie, guys, this company might go bankrupt, or at least get bought out by somebody at this rate. And this has been a company that I've dogged on for months and probably a couple of years at this point, as the interest, the demand in the fake meat honestly has kind of died down. I'm not saying it's a fad. People still buy these products, no doubt about it. I've tried them in the past. They're not that bad. But the proof's in the pudding, guys. Their sales numbers are not looking good. The company has not been doing well, in my opinion. Again, demand is dying down. The numbers kind of back that up. So yeah, at this point, guys, Beyond Meat, I mix these up all the time. Beyond Meat is not looking pretty. Actually, it looks like they reported earnings yesterday. So what did they do? They did 92 cents. They lost 92 cents, which beat the loss of $1.01 expected, and they beat on sales. They did 92.2 million versus 91.73 million expected. And it seems like here net revenue guidance represents decrease of approximately 10% to 1% compared to 2022. Not good. And they got it for full year 2023 revenue of 375 to 415 million versus the 389 million expected. So this company, guys, again, in my personal opinion, I don't know, I could be wrong, but I think they're either going to go bankrupt. Well, I don't want to say that for sure. I have to look at their balance sheet and look at their financials, but let's just say they're not going in the right direction. They're either going to go bankrupt, they're going to get bought out by a bigger company, I don't know, or something else is going to happen. But either way, guys, this company is going into the gutter. I mean, this stock was at what? When it IPO'd, 50 bucks, went all the way to 240. That was back in 2019. I was making videos back then, guys. I've been doing this for a while, and now it's at $10. Oh my God. So Beyond Meat, not looking good at all. Let me do one more stock here, guys. Then we'll wrap up the video. Okay, Disney. We'll take a look at Disney here, which I actually did buy more of Disney today. And this is music to my ears, guys. If this thing comes under 90 bucks, which right now we have a falling knife, it might come under 90 bucks, especially if we take the lows out from the middle of March. I'm going to be waiting there with open arms, just like this, waiting there with open arms to buy more Disney. And if you guys didn't know, this stock has not done anything in close to a decade now. That is just insane. Could you imagine the board of directors or, the upper management there? They're probably sweating and they're probably freaking antsy now because the stock has not done anything. And of course, that is not good. When you're the head of the company, when you're in the management team, you have to please the shareholders at the end of the day. Of course, you have to run the business and execute on all cylinders and return, make a return for the shareholders, which they have not done in the past couple of years. More than just that, I mean, look, back in 2015, guys, the stock was at 96. Now it's 2023, 8 years later, the stock's at $92. So it is down in the past 8 years, which is just insane, and I don't think it's going to last for long. I do not think it's going to last for long. At some point, we're going to get another nasty bull run in Disney, which could take it, let's just say, for example, it goes back to $200, which arguably was a bubble, arguably it was overbought. If we go back to $200 from here, that's a double up, and that might happen in a couple years. And think about it, guys, if it happens in 5 years, for example, that would be a nice annual return on Disney. Let's say your average cost is around 90, 95, 100, 85, whatever it is, right? And it goes to $200 over 5 years, you're talking a 20% return per year on a stock that I think will recover. I think will do well over time. So when we're looking at the stock market in general, some of the best deals out there, I know some of you guys might not like Disney for certain reasons. We're not going to get into that in this video, but if we're looking at stocks, businesses that are growing, their parks business grew, 17% year over year. Their total revenue grew 13% year over year. When we're looking at a business that's growing, that's doing well, the demand is there, their parks are always packed. I mean, this is a no-brainer in my opinion. Probably one of the better deals right now in the stock market, at least for me, and that's why I'm buying. I'm putting my money where my mouth is, and we'll see how it does over the long term. So with that being said, guys, I'm going to wrap up the video. If you enjoyed it, hit the like button, subscribe, and don't forget to get up to 15 stocks from Moomoo and 12 stocks from Webull. It is free money, and feel free to check out my Patreon. If you guys want to be a part of the Patreon portfolio, watch me build that, be a part of the Discord. You guys want to see my charts and ideas throughout the day, and have more access to me throughout the day as well. All of that's on Patreon, link down below or on the side, or go to StasOrFest.com/Patreon. Join it. You won't regret it. I'll see you guys on the inside. And with that being said, peace out.